And now we're going to do our third story, which is Citadel. Ken Griffin having a pretty good year so far.
Ken Griffin also has been stealing a lot of headlines this year. In a year where most hedge funds are up for the best in a decade, really, Ken Griffin's up 13.6%. And so this is his flagship funds, Kensington and Wellington. But the thing is, too, it's interesting. We've seen a lot of revolving talent around Citadel. Just yesterday, they hired two from Goldman. And so it's a good year. OXIF, the second one on the list, is, I think, even a more interesting one because OXIF has had a tough run. Since 2009, this is their best year yet. And remember, for OXIF in particular, something interesting is they're able to raise money again after they had guards from the U.S. after their bribery scandal.
So, like, what's making everyone win?
Wow, well, the volatility this year isn't as bad as last year. I want to point attention to Citadel's funds in particular because it wasn't just stocks, right? Everyone says these funds trailed the stock market, but it's not just about the stocks. They have fixed income currency holdings that have also been doing quite well. And if you just think about how they're doing compared to the S&P, which, as I said, you can't really do, the S&P is up 19%. So these are still trailing.
Yeah, I was going to say a rising tide and all that. I mean, it's really good for them. I'm really pleased for them. That's wonderful. But the market's been pretty forgiving.
For a hedge fund, I think it's pretty good marketing to be doing so well this far into the year because if we're going into kind of a tougher cycle, the idea is that they're hedge funds. But remember, we have to look at these funds over a longer period of time than just 6 months. 6 months doesn't tell you how well a manager is doing over a lifetime.